Good afternoon, everyone present here. My name is Darshan Solanki, and I am going to talk upon the topic acceptance of deposit and repayment of loan as per section 269 SS, section 269 ST, and section 269 T. To begin with my topic, first I would like to do the thing which I always do before I start anything. Please cooperate with me and please also support me in that. Ganpati Bappa! Moria! Mangal Murti! Moria! Thank you everyone. To begin with, the aim of introducing these sections is to reduce the evasion of tax as much as possible. In the Income Tax Act, the title of the chapter is classified as Requirement as to the Mode of Acceptance, Payment or Repayment in certain cases to counteract evasion of taxes. Income tax authorities uncover hidden and unaccounted cash during raids. Previously, the culprit would escape by saying that he has received the cash as a loan or deposit from his friends or relatives. Also, the persons with an aim of tax evasion would do false transaction showing payment and repayment of loans and deposits in cash. Therefore, to curb the increasing cash transactions which are leading to the accumulation of black money, these sections, section 269 SS and section 269 T, were introduced. Friends, to begin with the first section, section 269 SS. The Act says that according to this section, a person cannot accept loan or deposit or any other specified sum. Here, specified sum implies that advance in relation to transfer of any immovable property from another person otherwise than by an account pay check or an account pay bank draft or use of electronic clearing system through a bank account if he satisfies the following conditions. The first condition states that the amount of loan or deposit or specified sum individually is rupees 20,000 or more. The second condition states that the aggregate of amount of loan, amount of deposit and amount of specified sum, that is advance, is rupees 20,000 or more. So for example, if Rahul wants to take a loan of rupees 6,000, a deposit of rupees 9,000 and an advance of rupees 7,000 from Vineet, can he accept that in cash? No, he cannot. Why? Because the total is more than 20,000 and thus he will compulsorily have to accept it through the mode specified in the Act. Therefore, in a nutshell, we can say that a person cannot accept cash, loan or deposit of rupees 20,000 or more from another person. However, every section has some or the other exceptions. So this section does not apply to any loan or deposit or specified sum taken or accepted from, or any loan or deposit or specified sum taken or accepted by the government, any banking company, corporations established by the central, state or provincial act, government companies and the institutions which are notified in the official gazette. So these entities are excluded from the provisions of section 269 SS. Now friends, let us begin with another section, that is section 269 T. Just as we studied in the section 269 SS that we cannot accept loan or deposit in cash, the same way section 269 T prohibits any person to repay the loan or deposit or specified sum otherwise than by an account pay check, account pay bank draft or by use of an electronic clearing system through a bank account if the certain conditions are satisfied. The condition number 1 says that the amount of deposit or loan to be repaid should be more than 20,000. Then only he has to use these mode of payments. Second condition, that the aggregate amount of loans or deposits including the interest amount. In this case, the amount of interest has to be also included, held by such person is more than 20,000, then he has to use the modes of payment specified in the Act. So again friends, in a nutshell, a person cannot repay a loan or a deposit in cash if the amount including the interest amount is rupees 20,000 or more. As usual, every act has some or the other loopholes and every section has some or the other exceptions. So this section also has the exception that a person who is paying 20,000 or more towards the payment of loan or deposit does not have to comply with section 269T if he pays to the following parties. That is the government, any banking company, corporations established by the central, state or provincial act, government companies and other notified institutions. As usual, we are Indians and breaking the law and the provisions is our hobby. So again, the moment we break the section, we break the law, we have to pay a penalty. So penalty provision for section 269 SS is section 271D, and it states that the amount of penalty is equal to the amount of loan taken under section 269 SS. On the other hand, the penalty provision for section 269T is section 271E, and the penalty amount is equal to, that is 100% of the loan repaid under section 269T. So friends, now I want you to contribute to the session and answer me the questions. Let us have a look on 3 case studies. Case study number 1. Mr. Santa has taken a loan of rupees 1 lakh in cash for wedding of his daughter from Mr. Banta. So in this case, has he violated section 269 SS? Yes or no? Yes, he has violated because it is more than 20,000. Case study number 2. Mr. Ram paid rupees 5 lakh in cash against loan taken by his father after his death. Has he violated any of the sections? Yes, he has violated section 269T. Third case study. Haldiram Private Limited received advance of rupees 2 lakh from a customer. However, subsequently the deal could not be materialized and the amount was refunded in cash. Can anyone tell me, does the section 269 SS and 269T are applicable in this case? Yes or no? Because it is in relation to advance. Okay. So, some of the special considerations for audit which are to be taken care of, that while reporting the details of loans and deposits in a tax audit report, following points need to be considered. The first is like details of the assessee, that is the name, address, PAN, opening balance, etc. should be verified. Squared up means the loans taken and repaid in the same assessment year. Many a times we take loans for a shorter duration. So those things should also be checked upon. All the loans or deposits are to be reported even if they are grouped under debtors or creditors. Even if the loans are taken free of interest, the information will still have to be given. Whether it is with interest or without interest, that should also be disclosed. Scrutinize the cash book to find out loans or deposits taken or repaid in cash. Now friends, in spite of having the section 269 SS and section 269T, there was some lacuna because of which the culprits would escape, which paved the way for introduction of section 269 ST. Definitely we are Indians, so we can always find out the loopholes in the tax system. So the budget 2017 has brought with it several measures which aims to stop or minimize the tax evasion, money laundering and generation of black money. One of the such measures happens to be putting a cap on the cash transaction, which has been done by bringing section 269 ST. Now what does this section 269 ST tells us about? The proposed section, which is envisaged to have a far-reaching impact on the transaction, thus in an attempt to unearth the intricacies, I have tried to collate and analyze a list of questionnaires on the section and its probable impact. So I begin with the first question, that is, what is the intent behind the insertion of this section 269 ST? So friends, it clearly puts a restriction on the cash transactions and reduce the quantum of black money which affects the revenue of the government. When is this insertion effective from? This insertion is effective from the financial year 2017-18, that is the assessment year 2018-19. who all are required to comply with the provisions of section 269 ST. So I'll tell you what does section 269 ST says about. It says that no person shall receive an amount of rupees 2 lakhs or more in aggregate from a person in a day, or in respect of a single transaction, or in respect of transactions relating to one event or occasion from a person otherwise than by an account pay check or an account pay bank draft or use of electronic clearing system through a bank account. Again, there is an exception to this section, that the section should not will not be applicable to any receipt by government, by any banking company, post office, saving banks or cooperative banks, etc. The next question, what kind of receipts are within the ambit of this section? All receipts. It does not specify whether you have taken for a loan, whether you have taken for an advance, or whether you have taken as a deposit. All the receipts are considered in this section. What are the instances that may trigger application of the section 269 ST? Now friends, this section is applicable to all such cases where the amount received in cash and exceeds the threshold limit. What was the threshold limit? The threshold limit was 2 lakh rupees. Okay, so at that time this section will be violated. Further, the ambit of the section has been increased by adding certain circumstances. The next question, what does the term event in this section 269 ST means? Now the term event in this section means an accounting event. This is to say that every such event which is required to be accounted for will be termed as an event. For example, each lease payment in a lease transaction may be called as an event, as a separate invoice is required to be raised. Similarly, each EMI for which a separate invoice is raised will be an event. The seventh question, that is, who all are required to comply with the provisions of section 269 ST? As the section starts with no person, the section starts with the word no person. It means it applies to all the persons, including the HUF, sole proprietorship, partnership, AOP, BOIs, everyone is included in this section. Does the section cover loan repayment also? Yes. If a company receives any amount in cash, whether it is a loan repayment or otherwise through a mode other than the prescribed mode, then the section will very well apply. Just as we studied in section 269 SS and section 269 T, same way this section also can be violated, and it has been always the habit of Indians to violate the sections, and therefore the penal provisions are also applicable. So what is the consequence for the violation of the section? It has been proposed that section 271 DA in the Income Tax Act will be applicable if any provision of section 269 ST is violated, and the amount of penalty will be equal to the amount of money involved in the violation. These are some of the case laws which are I would like to begin with the first case law, that is ITO versus Sri Mahavir Industries. It was held that in this case that the cash paid to meet the medical expenditure treatment in emergency does not attract penalty under section 271D. The second case law, that is ACIT versus Winman Finance and Leasing Limited. Now friends, in this case where the depositors are residing in rural areas and not having an access to the banking facility and are ignorant about the relevant provisions of law, it would constitute bona fide reasons for payment in cash because they are not having those facilities as well. Okay, the third case, that is Balaji Traders versus DCIT. Well, in this case, the lenders did not have any bank account which compelled the assessee to accept the loan in cash, and this has been considered as a reasonable cause for acceptance in cash. The fourth case, that is Madras High Court Limited, Madras High Court in CIT versus Rukmini Ram Raghav Spinners P Limited. In this case, it was held that the contribution towards the share capital shall not be treated as a loan and advance for the purpose of section 269 SS. Thank you, friends.